In this video FAQ, Chuck Peterson discusses community association master policies, insurance, and risk management.
So the main thing to consider when discussing types of master policies and really looking at them to make sure the association and all of its members are covered, and your role as a board is to make sure that the broker you're working with also looks at the bylaws and you're familiar with them and counsel is familiar with them, because there's so many planned unit developments now. And are they an HOA? Are they a COA? How does that all work together? Are we supposed to be covering everything all in, including the fixtures and additions above builder's grade, including builder's grade material and above, or just a builder's grade material? Or are we looking at more of like a bare walls policy, where it covers all real property from the exterior framing inward into the paint, they usually would say. So there's a lot of different factors at play here, and just want to be cognizant of what type of policy you're supposed to have as dictated by the bylaws that govern the association. And then your insurance provider can help you craft the correct policy to make sure that that's taken care of. One of the biggest coverage attributes that you want to make sure for the association that are taken care of are the general liability limits. Because as an association, there's an exposure for each of the owners and also the association itself when it comes to claims for bodily injury or property damage for which the association is liable. So at a minimum, the association is going to carry $1 million each occurrence, $2 million aggregate. But then on top of that, definitely want to make sure you have an adequate umbrella or excess policy, because in today's litigious world, it's so important. And there are programs out there with risk purchasing groups now, having specialized in the space for the last 20 years, where you can get a 25 or even a $50 million umbrella, sometimes for the same cost as a $2 or $5 million umbrella. So it really pays to know and work with somebody who understands the industry and how they can get it. And then also each of the unit owners must carry their own general liability through their HO6 that we'll talk about later. The other major component of an association's properly structured policy is the property coverage. So right alongside the liability coverage, we're talking about the property coverage for the association, and making sure that the building structures, the common areas, that things are outlined correctly. Again, referring back to the bylaws and how things are set up there, as fact is it's going to be replaced as builder's grade. And then, in that case, certain things aren't covered, which you can address, and we'll talk about on the HO6, such as improvements and betterments, upgrades, additions, and so forth, whether they're done by the current or the previous owner. But again, the property coverage is essential to have a great policy that's a special perils, all risk type policy that you've also discussed earthquake and flood, sewer and drain backup. You selected a deductible that you're comfortable with, because sometimes having some nuisance claims, it's nice to have a higher deductible potentially for the association, self-insuring some of those, and then each unit owner in their HO6 can cover things for the master policy deductible through their HO6 loss assessment, which we'll get into later. But again, not all property coverages are created equal, so you want to work with someone who specializes in this space and understands it, so that there aren't gaps in the coverage, and you have the right amount of coverage for your unique situation. Another key component of a properly structured master policy for an association or planned unit development, even homeowners association, we would be looking at directors and officers coverage. You never want to serve on the board and you're doing a service to your community, volunteering your time and expertise to sit on the board and help out your fellow unit owners. But again, this really is important because it protects against claims made for alleged wrongful acts or omissions while acting on behalf of the association. So general liability excludes this. So that's why it's so critical to have a D&O policy, and moreover, have a D&O policy that is specifically targeted for condo associations and planned unit developments, and has the, I'll call extra bells and whistles in there that really respond correctly for this type of coverage to make sure that everybody is protected that is volunteering their time. And again, to purchase a high limit of this, you can usually get a good deal. So at a minimum, you want to have $1 million in coverage, but you can go up from there depending on the board's level of comfort, and it would behoove you to potentially look at larger limits of D&O coverage. As you can see from this slide, this is an example of some of the claims that directors and officers coverage could step up and respond to. Two of the biggest claims being non-monetary and discrimination. Then also there's libel and slander potentially, failing to pay the HOA debits in a timely manner, conflict of interest policies, and just overall carelessness in conducting business or legal matters, and sometimes ignorance of the HOA records and books, wrongful eviction, and so on. But again, if something happens where they question then the acts and the professional, if you will, the errors and omissions, in this case of the directors and officers, they could be brought into brought to bear, and you want to make sure that you have the right coverage that protects the officers and you serving on there, so that you have that limit in place, which also protects the association in case they have made any legitimate mistakes. No discussion about a properly structured, insurance program for a community association would be complete without discussing risk management. And there's so many different ways to talk about this, and this is why it's so, again, important to work with an expertise that specializes in insuring associations and has the right carriers in place too, but also has the risk management strategy. So it's not all just about insurance. First, there's risk transfer. Do you obtain certificates of insurance from all contractors that work on the association's behalf? And do you make sure that those COIs list the association as additionally insured on there? And that's, I can go into deeper and deeper depths with attorneys on that, as far as hold harmless and waiver of subrogation as well on those certificates of insurance. Risk control. Is there an effort to prevent property losses and personal injury from happening? An effective risk control program will result in hopefully fewer claims and also less severity when there are claims. That'll help keep the association's insurance premiums in check too. So a lot of times the carriers, if they specialize in this space, will, free of charge, bring out their own loss control folks to look and assess and see if there's any areas where there could be some improvement. And then the board wants to implement those so that they can make sure it's safe for their residents, and then also make them more appealing to an insurance carrier that can, again, help them get the best package and the best pricing for the value. Finally, risk protection. So this is buying the insurance package that protects the association financially when accidents do occur. And again, it's critical to make sure you select the right broker as well as the right carrier, and look at a bunch of different options there and feel comfortable with who you're working with, and make sure you go over all of the different potential gaps that could be there, and make sure that your association is adequately protected. So a couple other key coverages to consider when discussing the insurance program for an association would be workers' comp. And this, most of your contractors that you bring on and the maintenance, et cetera, that you have there, even if they are all 1099 and not W-2s, which if they're W-2s, you have to have the workers' comp for on-site staff, managers, guards, et cetera. But for the landscaping, snowplow, so on and so forth, if any of those contractors, their insurance expires, they forget to pay their bill, yes, you're going to be notified, but there could be a lapse, and you want to make sure that you have a policy for what we'll call certificate purposes only, which would protect you as a backstop and respond if one of those folks was injured. But again, you still want to have that practice in place to collect the certificates of insurance with the additional insured hold harmless waiver of subrogation for your association. The other coverage is crime, employee dishonesty, theft, robbery, or board member dishonesty. And this usually, again, with a good company that specializes in this, will also include the property management company at no additional charge. So you're covered there for any wrongdoings. Again, we talked about this a little bit earlier, but consider flood and earthquake. If you're not in a high hazard zone, it can be very inexpensive. So it's worth at least looking at it. And then also pollution coverage, sometimes overlooked quite a bit. And this would be, maybe there isn't an issue there, but maybe there's nothing to be known underneath. So it's good to have that just in case anything ever arises, and then the association's on the hook for a large cleanup bill. And those policies are usually very reasonable to have a site pollution liability policy. And last but not least, hired and non-owned auto coverage. So coverage if you send one of your employees to the bank to drop things off, or you're doing some type of an event and they go in their own car and they're a volunteer and so forth, or you have to rent a truck or some other type of vehicle as part of an event. So there's just a slew of reasons that should be included, and the cost is negligible. So those are some other considerations, and by no means an exhaustive list, but some things to start thinking about when you want to make sure that you round out your association's insurance program.